What's up everyone? Welcome back to my channel. Today, I'm going to be showing you how to mark daily, weekly, even 4-hour levels of support and resistance, and how to tell which of those levels is most significant, and even how to use the less significant ones as well as the most significant ones. Now, I know it's been a little while, and real quick, I'll just explain where I've been. So back in April, about 2 months ago, my Market Cipher subscription ran out. I had only bought a 1-year subscription, so that ran out. I have been unable to trade, do TA how I normally do because I mostly use Market Cipher. And after having used Market Cipher for about a year, I've decided that I want to continue using it. I want to pursue learning how to do it the right way. And so I decided to take a more structured approach to learning this, and I started taking the Jason Casper trading course. I'm sure if you guys watch his channel as well, you can see his influence on my videos because I've basically been learning how to do TA from him. And now that I've been taking his trading course for a while, I'm pretty confident that once I'm able to get my hands on Market Cipher again, there will be a drastic improvement in my trading and TA. And so right now, I am just waiting until I can afford the lifetime subscription for Market Cipher because I'm not going to pay for another 1 year, just so I have to pay for the lifetime whenever that runs out. And we also have the Gods of Asgard demo coming out soon, the full game to release, I'd say probably a month and a half tops, but we'll see. Either way, that's going to be some more content that I can bring to the channel. Maybe I can start streaming that game. Maybe I can start streaming TA. Maybe I can stream both of them, do TA, and then start streaming the game. So I'm excited for what's to come. I have some pretty big plans for this channel. But anyways, now I'm going to show you how to mark accurate weekly, daily, and 4-hour levels so you can always have a structured outlook on these markets. Support and resistance is a pretty basic thing in TA, but it is one of the most important and fundamental things for traders to understand. Being able to mark out the most significant support and resistance levels, and then being able to find confluence with other levels like fib levels, volume levels, to get the most significant levels that you would be interested in taking trades from is one of the most fundamental skills to have as a trader. And you probably hear some YouTubers talk about how prices come to a weekly level, how we rejected off a weekly level, how we found support on a naked daily level or something like that, and you don't exactly know what it means. Well, I'm going to show you how to mark them out on your chart and which ones you should be keeping your eye on most. And so we're going to start off on the weekly time frame here. Basically, what you want to look for when you're looking for a weekly level to mark is something like this. If you zoom in here, you can see that we had 2 candle bodies back to back that wicked above this level here, but were unable to close above it. Same with this one. This candle body wicked above this level, but then got brought all the way back down and ended up closing down here. So we would mark this level out as a weekly level. And what you'll notice about this one is as soon as we printed this daily level, we pretty much immediately got a rejection off of it on this next weekly candle. We came up, touched this level, and then rejected hard off of it, and that was the beginning of a much larger downtrend. Then if you scroll down a little bit, you can see we have another weekly level right here. Same thing, we had 2 candle bodies with wicks above this level, but they were unable to close above this level. So we would mark this out as a weekly level, and in fact, this one is much more significant than the last one that we looked at. So basically, the most significant levels, the most reactive levels, are typically, most of the time, going to be the ones that are untouched. And what that means is since Bitcoin created this daily level, we had these 2 candle bodies right here that formed this level. Once we formed another candle body, we did not come back up to touch this level. So this level would be untouched, or as some people say, it is a naked weekly level of resistance. And so this is a very important level that I would be looking to potentially take a trade from, and so I would mark that out. I just put N weekly on there. I don't know why that's in the center. It's not the way that I like that. I like to put it over on the right. So I would mark this level out as a naked weekly level because price has not come back up to touch it. So if Bitcoin comes back up to 29,875, we could potentially look to take a trade from this level. We may see a pretty sharp reaction off of it. And another thing to keep in mind, the more times that a support resistance level is touched, in general, the less reactive it is going to become. So you can see that just below this first weekly level that we marked, we actually had another weekly level sitting right here, and this level was reactive. On the next candle that printed after we formed this level, we came down, got a wick, and then a pretty sharp bounce off of this level. Wasn't anything too crazy, but I mean, from this level, it was about 1.5%, so we did definitely get a reaction. Then you can see that the next candle after that, we just fell straight through this level. We lost the level and then started trading way below it. So you could say that this level is no longer as significant as this level is right here because we just formed it recently and we only had one price touch off of it. So we could still consider this a pretty significant weekly level here. Now, there's no exact science to what levels are still significant, what levels you should delete because they're no longer significant, but the way that you can use old levels that aren't as significant anymore is you can look for confluence with other levels like fib levels, volume levels, moving averages. If you see that, we have confluence with, let's say, a fib golden pocket at an old weekly level, then you can probably still expect price to have a reaction off of that level. But for the most part, I like to keep my most relevant weekly levels in one folder, and maybe I'll keep another folder for my old weekly levels that are no longer as significant. And that's just one way to stay organized. If you see that, let's say we have a golden pocket sitting in the middle of price action and we don't have any new weekly levels sitting at this area, maybe you can start pulling up your folders from old daily weekly levels and see if we have anything here, because typically, let's say we don't, but let's say we had a daily level of support resistance way back here. Even though this is a really old level, if we have a golden pocket here and we also have these moving averages here, this could still be a significant level that price will react off of. Now, when I'm doing top-down analysis, when I'm going through and marking out all my new levels for a chart, typically I like to start on the weekly, then I'll go down to the daily, then I'll do my 4-hour levels. So I'm essentially just doing the same thing on the daily and 4-hour. I'm looking for these levels that price wicked above but was unable to close above or below. If you're doing support, like down here, we had 2 candle bodies with wicks below this level, but we were unable to close below this level. And so really, I like to start from the top down. I start at the bigger time frames, go down, I start marking out my daily levels. I try to look for the untouched ones. I thought this was going to be one. It wasn't. It looks like we came back up to touch it with the next candle. Oh, maybe we didn't. I'm going to have to zoom in here. Maybe we didn't. Maybe we did not come back up to touch this level. So another thing that you can do to make these levels more accurate is I just take the magnifying tool, zoom in on this level, and then try to line up this line as perfectly as you can with the closes of these candles. That is how you're going to get the most accurate levels. And then once you have it perfectly lined up, so you don't accidentally move it later, you can lock it, and then you cannot move this anymore. But yes, this is a untouched daily level up here. This candle came pretty close to touching it, but did not come back up to touch this level. So this would be an untouched daily level, and we can expect that price is going to have a reaction off of this level when it comes back up to it. And you can see there's lots of daily levels in this area, especially right in here. When you see lots of potential daily levels here, what I found is the best thing to do is mark out the most recent one, because the most recent one is typically going to be the most significant out of all of them. And maybe you would mark this one an old daily level, because there's been a lot of price action above and below this level, so it hasn't been respected as much as we would like to. But let's say hypothetically we pull a fib from somewhere and there's a golden pocket here, we could still use this to trade. And you can also do this on the 4-hour if you're looking for more local levels of support resistance. Maybe if you're a scalper, the 4-hour would be better for you. And I like to make the 4-hour ones blue. And we actually have an untouched 4-hour level right here, so I would mark that out as untouched. And I mean, actually, I don't think we would call this one a level. It's maybe a zone, a 4-hour zone, but we would like to see these candle bodies be at the same level, so I'm actually not going to mark that one out. Let's see if there's a better 4-hour level we can mark. Yeah, it looks like this one right here. That looks good. Again, it isn't perfect, but this one's better than the last one. There isn't as much separation. And this one is actually an untouched 4-hour level, so I can mark that out. And 4-hour. And potentially, if price comes down to this level, we can look to take a trade from this. Now, obviously, you're not just going to trade off of these levels when price comes to them, because there are plenty of instances where price just doesn't respect these levels. It actually blows straight through them. But what you want to do is, as price is approaching the levels, you want to check your confirmations. I like to use Market Cipher. Some people use other indicators, but you want to make sure that you have the confirmations that you're going to get a reaction off that level. And you could also wait until we get the reaction off the level, till price comes down and then gets a big wick up, gets a big buyback up. That's typically a pretty good signal that we are getting a reaction off that level. So you want to mark out the levels, wait for price to come to them, then check your confirmations to see if you want to enter a trade. All right, everybody, that's pretty much it for today's video. I will be back very soon with the Gods of Asgard demo first look. Hopefully that should be coming out in a couple of days, and hopefully everything runs smoothly with my computer so I can get that video out quickly. All right, everyone, thank you so much for watching. I'll see you in the next video. Peace out.